Welcome to today's What Will Move the Market show. I'm your host Prem. It's Tuesday, December 23rd, 2025, and here's everything you need to know as the markets open for today. Wall Street extended its winning streak yesterday to 3 consecutive days of gains as the Santa Claus rally continues to gather momentum. The S&P 500 rose 0.6% to close at 6878.49. The Nasdaq Composite climbed 0.5%, finishing at 23,428.83. The Dow Jones Industrial Average advanced 0.5% to 48,362.68. Technology stocks continued their dominance with a stellar lineup of gainers. Tesla surged 1.56%, riding momentum from strong delivery expectations as the year draws to a close. Nvidia climbed 1.49% on renewed optimism around artificial intelligence applications and easing concerns over chip export restrictions. Micron Technology stood out with a 4% jump, reflecting robust earnings and positive outlooks for memory chip demand heading into 2026. Oracle posted a solid 3.34% gain, continuing its momentum from recent corporate developments. Beyond equities, precious metals caught fire as geopolitical tensions between the United States and Venezuela kept haven demand elevated. Gold surged to a new record high of $4,422.24 per ounce, climbing $83.46 on the day. Silver also reached fresh record territory, trading at $68.93 per ounce, up $1.76. The energy sector benefited from the same geopolitical backdrop, with crude oil seeing steady support. Wall Street remains within striking distance of all-time highs as year-end momentum builds. Turning to Indian ADRs, we're seeing a mixed picture overnight. Infosys ADR declined 5%, reflecting some profit-taking in the IT sector after a strong rally earlier in the month. However, the financial sector showed resilience. HDFC Bank ADR gained 1.11%, signaling continued strength in Indian banking. ICICI Bank ADR rose a more modest 0.23%, while Reliance GDR climbed 1.15%. For Indian investors, the key message is that, while there's some weakness in IT valuations, domestic financial stocks and energy majors remain well supported on strong fundamentals and global flows. Moving to Asian markets, we're witnessing broad-based strength across the region this morning. Japan's Nikkei is trading strongly, up 1.93% as of early morning, reflecting strong corporate earnings and yen weakness supporting exporters. Hong Kong's Hang Seng is advancing 0.43%, while Shanghai's composite index is climbing 0.69%. These moves signal that positive momentum from Wall Street is translating into regional buying. On the gift Nifty front, the December contract is trading around 26,230 levels, indicating a modest positive opening for the Indian market today. This translates to a slight premium over yesterday's Nifty 50 close of 26,172, suggesting the Indian benchmark will likely open with marginal gains. The combination of resilient Asian markets and positive technical setup supports a steady opening, though the Infosys weakness may cap enthusiasm in the IT-heavy index. Geopolitical developments remain a key theme driving global sentiment. Escalating tensions between the United States and Venezuela, including threats around oil sanctions and naval operations, are providing continued upside to crude oil prices and precious metals. This dynamic is creating a complex environment for emerging market investors like India, as energy price strength bolsters certain domestic sectors like oil and gas, while higher commodity costs could eventually pressure inflation expectations. For now, the focus remains on the positive year-end rally, but geopolitical developments warrant close monitoring. On the domestic front, Indian markets are poised to consolidate recent gains today. Foreign institutional investors showed marginal selling on Monday, with net outflows of 516 crores, but domestic institutional buyers remain strong supporters. The rally in the Nifty 50 has consolidated above the 26,000 level, and technical indicators are aligned for potential further upside. Infosys announced a revision in full-year revenue growth guidance to 2 to 3% in constant currency terms, which should stabilize the IT sector's narrative going forward despite today's ADR weakness. The Indian rupee remains stable near 89.45 against the US dollar, supported by strong domestic inflows and RBI's presence in the market when needed. From a technical standpoint, the Nifty 50 has key resistance levels at 26,184, 26,216, and the important level of 26,267. Support is anchored at 26,083, with stronger support coming in around 26,000. For Bank Nifty, resistance zones are placed near 59,359 and 59,410, with critical support at 58,700. The breakdown we avoided yesterday suggests traders remain positioned for higher levels, but any weakness should be used to accumulate quality names. On the commodity front, crude oil is holding firm at $57.93 per barrel, up 2.5% from the previous session, driven by geopolitical supply concerns out of Venezuela. Gold and silver are trading near record highs, with gold at $4,422 per ounce and silver at $68.93 per ounce. The strength in precious metals is primarily driven by geopolitical risk rather than inflation expectations, so movements should be viewed through that lens. As traders head into today's session, the key theme is cautious optimism amid year-end technical strength and geopolitical premium in energy and precious metals. The Nifty 50 looks positioned to test the 26,267 level if sentiment remains positive, but watch for profit-taking around resistance zones given the Infosys weakness. Bank Nifty's breakout above the trend line suggests institutional interest remains constructive. For tactical traders, the strategy should focus on quality financial and energy stocks that can benefit from current macro tailwinds, while maintaining discipline on IT names given mixed signals. Avoid adding leverage given end-year thinness in liquidity and geopolitical uncertainty. That's everything you need to know before the market opens today. For more in-depth analysis and to discuss specific stocks and strategies, stay tuned for our evening wrap later today. Send in your questions and trading ideas, and please subscribe to this podcast to hear US every single market day. This is Prem. Thank you for tuning in to What Will Move the Market, and we'll see you at the closing bell.